Are you a limited company owner? Or act now or lose out on £2,000 tax-free. As a business accountant, my team and I spend all day long helping business owners on their journey. Particularly around this time of year, we see a lot of people missing out on an opportunity as a limited company owner to use the dividend allowance. So this is an allowance, it's kind of use it or lose it. I'm going to dig into the details in a minute, but it allows you to have £2,000 of dividends tax-free. Now, quite often as a limited company, that's going to be from your own company, but it could be from any different companies and other dividend income that you may have. So before we dig into this, if you like these type of videos, make sure to click the subscribe button below to get notified whenever we release more videos just like this one. So let's have a quick recap. Who can have dividends for a start? Because I think that's an important place to start. Now, dividends are paid to shareholders of a company. It's just a way of getting the profits out. We've done other videos on this, but first off to say, yes, as a limited company owner, generally you're the owner because you own the shares, which means you're entitled to dividends. Now, you can only have a dividend if you've made some profits. And I don't want to get too technical in this video on that, but it's a really important thing to note because I'm going to talk about some things here where I'm like, make sure you use this allowance, make sure you do this. But it all comes back to, can you legally have a dividend, what they call declare a dividend out of the company? Because you don't always need the cash. So let's do a very brief example of how this might work. You've taken £10,000 into your company. You'll pay tax currently, at the time of recording this video, at 19% inside the company. So let's say you had no other expenses, so £10,000, £1,900 worth of tax, you got £8,100 to come out. And that's a very, very straightforward, simple example. It's rarely the case, but let's just say that is the case. You can then decide to pay a dividend in the majority of cases. And again, with all these videos, I'm going to say the caveat of course, it depends on your personal situation and everything else, but generally in this easy scenario, that's where we are. So you can then declare a dividend. So you might look and say, well, I've got no other income from dividends from anywhere else. So I've got this £2,000 allowance that I need to use before we get to the 5th of April. So you can declare yourself a dividend then of £2,000 and note that in your accounts. And of course, then in theory, the best thing to do would be then to take the money. You want to enjoy the £2,000 in your pocket. So you can see the company's paid its tax on it already. So when it comes out to you, you're using your allowance and there's going to be no further personal tax, which is great. And that's important. Now, one of the key things to understand is it is actually possible that you don't have to take the £2,000 out of the bank. So you might say, well, and this is one of the key areas where we actually see that you end up losing the allowance is people are like, well, I don't want the £2,000, I want to reinvest it in my business. But on paper, you could have had the dividend. So it's possible to put the right paperwork in place, some meeting minutes and things like that, to just say, look, we've sit and had a board meeting with ourselves most of the time, and we wanted to declare this dividend before the 5th of April, so whatever date that may be, and note it in the accounts. So in your bookkeeping, you'd normally put that to, you've paid a dividend, and the other side of that goes to your director's loan, which is kind of a pot of money that's owed back to you at a later date. So it sort of earmarks it in your accounts. So if you imagine using that example I just told you about, you'd have £10,000 of profit, and you'd have a liability for later of £1,900 of tax that you've got to pay, and then there you'd have a little bit in the accounts now earmarked for £2,000 in your director's loan account that's owed back to you later. And if you've got the right paperwork in place, it counts as being paid in this tax year before the 5th of April. So for your personal tax return, if you were doing one of those, you would actually put those £2,000 of dividends on that tax return, even though you hadn't physically had the cash. And that's quite an important thing to understand. And there's lots of tax law that backs up these type of things, but just to keep it really top level, they're the kind of things you want to do. If you've got an accountant, definitely speak to them about it. The main purpose of this video really is to make sure that you're not going to miss out by not thinking about it. Because if you've got one of these kind of traditional old school relationships where you're just seeing your accountant once a year, and that might not be into the middle of next year, then you could miss out on this allowance. And it's for those people that think, I don't want to pay, I don't necessarily want to pay, or might not realise that they could declare a dividend. So check your records, have a look, and do get professional help if you have got that to hand. So that's kind of the dividend allowance in a basic, but before you go, there's another couple of points I want to mention on this. And the first one is you can also think about other people in the business that might have shares. So if you've got boyfriend, girlfriend, wife, whoever else who's got a small shareholding, you could consider whether you could use some of their allowance of their £2,000 dividend, because everybody's got one, to pay some more of those dividends out. So especially good, and you see it quite often in sort of husband-wife scenarios where we're sharing finances, or boyfriend, girlfriend, where we're sharing those finances internally. So it doesn't doesn't matter who really gets taxed on it because it's all going into a joint account anyway. So there's those kind of opportunities then to look for, is there anyone else that we can pay this to? It's also possible, within that's widely out of the scope of this video, to change that shareholding to make sure that's possible in the future. So definitely speak to a professional about that one, but that is possible. Now there's a couple of tax traps I just want to mention in this. The first one is making sure that you can actually pay those dividends. So you need to account for future tax. So we talked about in that scenario, the corporation tax there at 19%, you need to consider that. You also might need to consider, if you're looking at your accounts, that things like depreciation and some of these other accountancy adjustments will actually affect the amount of dividend that's possible. And again, I don't want to get too technical in this video. I kind of just want to get you thinking about these things that are possible, but they are things you've got to bear in mind, because otherwise you could be in a position where that dividend was not actually payable. So that's quite an important piece. The other tax trap to mention is if you've got dividend income from other sources, so you invest in the stock market and get paid dividends and all these kind of things, you might not have a full £2,000 at all. You know, if you've got some other, I don't know, you've inherited some shares that pay you decent dividends every year, for example, it's going to eat into that amount. So just make sure you've given it some thought. As always, the best thing to do is check with a professional, but again, just want you thinking about it. So they're the main areas that will allow you to use this allowance and get the most out of it before the 5th of April. So your action point at the end of this video is to make sure you review your accounts. Can you pay a dividend? Is it a good idea to pay a dividend based on your other allowances? And then make sure you get the paperwork in place. That's it. I'll see you in the next one.